Christina DeVoe with LiveFuturesTalk.com for your Thursday, May 8th wheat report, courtesy of Thomas Berry. Premiums resume the slide with futures not far behind. Sometimes you see options prices accumulate extra premium leading up to a USDA report like the one coming out on Friday. But wheat options market is simply just can't muster the interest or desire to create such a phenomena. Instead, we're getting the opposite effect as we head into Friday's action, with no one holding up the July wheat options except for the occasional short covering order, and many straggling locals are still trying and still long on the July and fruitlessly defending their longs with limited results at best. In fact, for the first time since October or November of last year, all 3 months, July, September, and December, found themselves below the psychological 40% mark for the implied volatility, with July 39th at 0.5%, September 39%, and for December 38th about 0.5%. And it's certainly a far cry from the lofty levels that made the idea of owning 45% implied as an enriching bargain of entry point. And make no mistake, with the July that dipped into that above mentioned 45% psychological mark over the last couple of weeks, you can really bet that there were more than a few traders prepared to pounce for the long side of 45%, with thoughts of another run above 50% at least. The only problem with the current situation is that there really isn't any underlying squeeze going on, and there isn't enough fresh wheat store to spur anyone into really jumping back into what is just becoming a more and more exhausting situation, as you can see from the chart. Add the notion that most of the news coming out Friday is geared towards corn and beans, and you're left with what is less than inspiring wheat market and relies on past excitement as a benchmark on how to approach the present. That's not very effective. Wheat options traders are trying to draw conclusions off the customer activity that is traveling through the corner of the trading world, but when the factor is barely measurable, as in there's very little business, it's been for 2 weeks now, there's only really one viable reaction, and that is to systematically take premiums out until you're either completely buckle in the longs or until you track fresh buyers, and the sooner the better, so as to expedite the trade. Plenty of time left for action, but so far the nibbies for the premium bulls are out there. Remember, we should have no regrets. We should never look back. The past is finished, and there's really nothing to be gained by going back over it. Whatever it is, gave us the experience it brought us, was something we had to know. This has been Christina DeVoe with LiveFuturesTalk.com for your Thursday, May 8th wheat options, courtesy of Thomas Berry. We'll see you tomorrow.